All right, welcome back to Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning in. If you're just tuning in, if you've been with us all day, it's my job to make you stay, and it's a little bit easier on a day like today. Oh man, that all rhymes way too well. I didn't mean that to happen. But let's take a look at what these markets are doing. How about corn? Let's start with that, and it's added a few cents to its real estate capture here early this morning. 12 and 3/4 cents higher in that, or 13 and 3/4 cents higher in that subcontract. 618 is last, about 5.5 cents off the high, so that's some good going there. Dees 616.5, making its move towards that 625 level. We got as high as 623 and 3/4. We're up 12.5 cents, so that's a good board. Corn strong out of the box here this morning. How about soybeans? Well, I think they're actually stronger, and they are. August is up 43.5 cents to 1509.5. That's 4 cents off the highs. Novi new crop 47 cents higher. There we go. 13.89 is last, and that's about 4 cents off of those highs. So trying to make it to that $14 level in new crop. So good to see that, I guess. Let's take a look at wheat. Wheat in Chicago up 43.25 cents in SEP, 8.20 even, 2 cents off the highs. And go out to the deferreds. See maize up 40.75 cents to 8.59 Hard red wheat, Kansas City. What's going on there? Up 43.75 cents in SEP, 8.81 1 cent off the high. That March contract's up 42.25 cents to 8.93.5. Spring wheat, and this is going to be Minneapolis. I almost said DC for some reason. I don't know why. Let's take a look at SEP. 30 cents higher, 9.36 and go out to that March contract. 28 cents higher there, 9.61.5. And then lastly, let's take a look at cotton because we can today. It's 455 points higher in that D's contract at 93.26. Boy, that's really been taking it on the chin. That's a 5 cent range there too. So some big movement over there. Let's bring in our guest analyst, Todd Horowitz from Bubba Trading. Todd is joining us he's in Chicago. Thank you very much for taking the time here this morning, Todd. We got a couple of minutes here. What do you think about these grains?
Well, I mean, they look pretty good, but we assumed there'd be some kind of bounce, Scott. When we talked on Friday, after a pretty tumultuous down week, we thought we'd see at worst a dead cat bounce. And until this proves otherwise, and we can rally more than 1 or 2 days in a row, I would assume we're just really kind of in a wide trading range. We're still in that time of year that's really the middle of nowhere, the middle of nothing. And we're depending on weather. And of course, we've seen a lot of reports out there that are not very good for what's to come, what should drive these prices a lot higher. But we're still dealing with light volume markets that can be whipped any way that the funds try to push for a short period of time.
And so your idea is that this is going to be just maybe short-term hot and dry, and we might correct, or do you think we've got something going here?
Well, I think overall we're going to see big prices to the upside in the grain markets. But in the short term here, again, I look at the lighter volume and I know what the fund's trying to push a little bit. They can try to push prices and force some action that may not really be warranted. So I would look for higher prices. But again, today's rally has got to, I guess, prove it. I'm from Missouri, show me. And I've got to see more than a one-day wonder and see what it looks like tomorrow and the next day before I can say that this rally is here now. I do think it's coming, but it may not be now.
Right, and so that's a good point. We have to see how this forecast plays out, and obviously they do change over time. And right now, as our weathermen show it every hour, a couple times an hour, it looks as though that dome of doom, as I call it, is hanging around and might be getting a little bit bigger between now and the end of the week. But you're right, that's gotta happen, or a lot of this stuff is going to be for naught. So stay right there. We're going to go away. We're going to pay some bills, and then we're going to come back and talk more with Todd Horowitz. He's with Bubba Trading in Chicago. We'll be right back after this. All right, welcome back to Market Day. I am the Cow Guy. Let's jump right in and not let that hold us back from taking a look at these live cattle prices. Why don't we see what's going on in live cattle in Chicago? Well, it's actually getting a little bit better than it was the last time. August is up 47 cents to 135.40. That's middle of the day's range-ish, kabibble, I think, right? And then if we go out, let's go out to Dees, 57 cents higher out there, 146 even. That's about 80 cents off the highs. So that's and about 70 cents off the lows, right in the middle of the day's range, but actually solidly holding in there. Now, feeders have got to deal with a higher corn board, so it's going to be tough, isn't it? We all know that. 60 cents lower in the August to 175.75, and October is off $1.10 to 181.35. So those are close to the lows. Trying to hang on there. We'll see how that goes for the rest of the day. Lean hogs are better. Look at this. August is up $2.40 to 112.22. That's 50 cents from the highs there. October right behind it. $2.10 higher to 94 spot 70. That's kind of in the middle of the range there. Let's bring in back Todd Horowitz with Bubba Trading. He's in Chicago. Todd, anything you want to talk about when it comes to livestock?
No, I think it looks pretty good, Scott, but I do believe that we're probably in the sweet spot here. I don't see a dramatic amount of room to the upside, barring some kind of disease that would affect them or something. And I think that we're gonna, I don't think we're going down, but I don't think we're going dramatically higher either. We're probably right in a pretty solid range. I thought feeders were really putting on a pretty good show earlier, as they were showing higher on the day, even though corn was up 13 or 14 cents. The hogs, I think, are probably towards the upper end of the range where they're going to go. And they all look good. They all look like they can stay here or hold or maybe move slightly higher. But I think a big move higher in livestock is probably not very likely at this time.
Well, I mean, are we susceptible to the economy? I know we had the stock market rally hard on Friday because of one good number. There was some capacity utilization and production, industrial production numbers that weren't that good, but the market liked that one number. Are we worried about how fragile the economy is for some of these prices in these livestock markets?
I think you have to be, Scott. I think that I think that's what we're looking at now. It's also surprising that cattle's higher today with crude oil at $5. I think there's a lot of problems that would lead to lower prices, which would be more my concern. Technically, they look great, but if we get to the real economy and how high inflation is, at some point it's got to come into play into the protein complex and pretty much everywhere, which could create the bigger problems.
Yeah, that's something that we're going to have to keep an eye on. I mean, Mother Nature kind of back in the driver's seat, but we keep getting hitting the windscreen from inflation and those types of economic stories. So we'll have to wait and see how that all pans out. But right now, it's pretty hot out there, and that's affecting things right in front of us. All right, thanks very much. Todd Horowitz with Bubba Trading. He's coming to us from Chicago. We're going to bring it back to Nashville, so I'm going to throw this back over to Janet.